Depending on the size and makeup of your business, some of these processes may be performed by the same person. The process starts with your access controller extending invites to the members of your team for their respective roles, including the transition administrator, feeds administrator, fund administrator, fund auditor, and tax agent. Here are the key activities that each of these roles carry out. Once your access controller assigns members of your team to the different roles, your transition administrator can then begin loading funds, and your feeds administrator can begin to activate data feeds, following which your fund administrators can begin to process funds and reports. Once the fund financials are prepared, your tax agent reviews each fund, your fund auditor undertakes the audit, and then your tax agent lodges the return. To process a fund, first you load all cash transactions, process buys and sells, process corporate actions, generate income, auto-match and manual match transactions, set up transaction rules, process ad hoc transactions, review exception report, revalue unlisted investments, process year-end, and then close the financial year. This is the chronological order of importing the fund's closing balance as at the last book close date for first-year funds. Once data feeds are activated, transactions are loaded automatically. For custom holding accounts and accounts for which you have not activated data feeds, you will need to manually enter the data. In the first year, cash transactions and buys and sells may need to be manually loaded, assuming you've not already activated the data feeds. If a data feed is not supported, it will need to be imported manually. Similarly, with transfer balance account reports or TBAR, if you are loading a fund for an existing client that you are migrating from a previous system, you will want to load their historical TBAR records. So going forward, if you start any pensions or commute any pensions on Class, typically most of the TBAR transactions are automatically generated, so no manual entering of data will be required. The objective of investment accounting is that 30 June on any given year, the investments being held at that point reflect the right accounting cost base and tax cost base. And in order to calculate that, these steps help follow the movements chronologically. The first goal is to reconcile data feeds and where there are discrepancies and resolve them. There will be events during the year that impact the balance of the investments. These include corporate actions and distributions or dividends from the fund's investments. So it's important that you get the order of the changes correct and the investments reconcile at the end of the year. These year-end activities are performed annually. Update any unlisted investment market valuations, check if any tax statements are required, check live exception reports for any fund details that need to be reconciled, run a period update at 30 June to calculate fund income allocations to member statements and finalise the financials, generate the financial statements, and then generate the tax returns through tax finalisation.